Okay, our next session is a panel discussion on the state of private investment in clean tech, and we are delighted to have Brian Kramer here as our moderator today. Brian is on the board of directors of CleanTechOC. He's a senior research analyst at Roth Capital Advisors here in Orange County, where he focuses on energy with a particular emphasis on clean technology. Prior to joining Roth in July of 2007, Mr. Kramer was an investment banker at Ardor Capital Investments in New York City, where he worked exclusively with companies in the alternative and renewable energy space. Prior to Ardor Capital, Mr. Kramer was a program executive for NASA's Project Prometheus, which was developing advanced propulsion and power generation for deep space exploration. As I mentioned, Brian is on the board of directors of CleanTechOC, and I have the great pleasure of working with him in that capacity. He also is, frankly, one of the most knowledgeable people I know in terms of the clean tech industry here in Orange County. So we're just delighted to have Brian and the rest of the panel here today. So, gentlemen, Brian, take it over.
Thanks, Greg. Thanks, Greg. Okay, so Greg's basically giving you my background. As he said, I've done nothing but clean tech in the financial world for the last 5 years, pretty much 24/7. And we're really delighted here. I'm delighted, and Roth Capital is delighted to be a part of CleanTechOC. We're really at the beginning still of what remains a nascent industry. I'm happy to be moderating the panel where we're going to get the insights of some folks who are on the ground every day talking with companies like those in the audience here about investments in clean tech companies. We also have, we're very fortunate to have someone from who looks at the overall sector very closely in terms of investments. So on the left, on your left, we'll start with introductions here. Is Luke Hayes from Creighton Equity Partners. Luke's a principal with the LA-based organization, invests exclusively in the clean tech space. Creighton has 9 portfolio companies representing a variety of sectors from building materials to solar and the smart grid. To his left is David Jones, who you heard from a little bit earlier. He's a partner with locally based Sail Venture Partners. Sail has 13 portfolio companies, again, all clean tech, really one of the pioneers in investing in clean tech. So hopefully those of you who haven't met Dave yet, or Luke, you'll be able to speak with them at some point today. And then lastly, we have Greg Meechin from CleanTech Group. Those of you who have been involved, he's vice president of the group's advisory services. For those of you who have been involved in clean tech, you're certainly aware of the CleanTech Group. It's the role that it's played in helping build awareness of the industry and in bringing together investors and companies in several very well-known, they've been going on now for several years, conferences that they hold throughout the country and I guess throughout the world now, actually bringing investors and early stage company, clean tech companies together. So I'd like to tee off the discussion. I think hopefully you have some slides from me and Greg. No? Yes? No? Uh-oh. No slides? I have a UBS, which I meant to check earlier, but I guess I should have. Well, I can start. As you get Greg's, his are the most important. There should be a conference folder on there. No, I have his on there as well, both of ours. Sorry about that, guys. So the first slide that you would have seen of mine, and again, it's something you guys are all familiar with, so just imagine a graph up here, X and Y axis. Okay. A couple of boxes with a really small box in the lower left-hand corner, a medium-sized box, and then a very large box going to the right. Y-axis is size of investment. X-axis is stage of the company or time frame of the company. So lower left-hand corner, friends and family, probably a lot of folks in the audience who are at that stage. That next larger box would be venture capitalists and potentially some government grants as well. And the third box, the largest box, both in size and stage of the company, would be private equity, public markets. And now, actually, it turns out, what we've seen with the recession, is something that's really, I think, unprecedented. I think it's very short-lived, and I think we'll hear more from the panelists about this, is in that very large box, which was usually the domain of the public markets and, again, some very large private equity firms, is the government and the federal stimulus. So we saw, we've seen billions of dollars pumped into the industry from the federal government during a period where, there it is. Thank you, that was very quick. And actually that government grants from ARPA-E, from the very, very earliest stages, which government has done quite a bit of in the past, now through very late stage with billions of dollars, again, worth of grants for both battery manufacturing, all kinds of electrical vehicles, smart grid. So again, probably short-lived. Don't think we'll see that again for quite a long time, but it certainly filled a void there through the recession. So next slide, please. There were some big IPOs and some, fuel cell companies that certainly raised a lot of capital, but nothing like we've seen in the last few years here. In particular, you could see it's peaked in 2008 at over 170 billion of investment into this industry. This comes from Bloomberg New Energy Finance, and we'll get to some clean tech group statistics here shortly. Don't worry. But Bloomberg really does a good job at capturing the entire universe of investment versus clean tech group, which generally tends to look at venture capital. So the 170 billion in investments has a lot of project finance for wind projects and solar projects. But you can see it's just a massive amount of money. It came down slightly in 2009 due to the recession, and I expect it'll probably be flat this year to slightly down. Potentially, we'll see with some of the slowdown in the wind a little bit. But again, solar, could be making up for that. We'll see. The final numbers aren't out yet. But the story here is this is a real industry. It's here for a long time, and it's going to continue to grow for the foreseeable future. The last slide I wanted to show, because it's the world I've worked in over the last 5 years, is the public markets. And as you can see, it follows to some extent the previous chart. And you can see back, again, going back to earlier this decade, what little money was going into the industry. It really started to spike in 2005. Late 2005, the fourth quarter, we saw SunTech and SunPower go public. And then we saw another 8 or so solar companies over the period of 2006 and 2007 hit the public markets. Obviously, you can see a large dip, almost to zero through the recession, but we're coming back out of that now. And again, hopefully we'll get to hear from the VC participants here about their views on the IPO market, because it really, it's a telling sign for the market and for companies. We saw the markets open back up. I guess A123 Systems was one of the first clean tech companies to come public after the recession, and unfortunately hasn't been the most successful to date, but there have been several that have been pretty successful, including Tesla is up above its offering price, Ameresco is also up, Jinko Solar, which Roth Capital was involved in, IPO, sorry for the plug, but has done extremely well since its IPO in May. So there have been some nice success stories. Elster, which is a smart meter maker, is due to go public this week. So that's another important sign of how the market's doing. So we'll be keeping our eye on that for sure. So now I'd like to turn it over to Greg, who's going to drill down a little further into the VC markets in terms of investment, looking back historically as well as the specific sectors within the clean tech that have seen the most money and where that could be going in the future. Greg?
Sounds good. I don't know if there were slides in that same folder, but if they're not, it's okay. I actually, I was thinking that I moderate too many panels, and I think one of the first thing I say to people on panels that I moderate is please don't bring slides. Slides are going to be terrible. There's going to be no dialogue. And as I was driving down here, I was thinking, damn, I sent Brian 12 slides. I gotta really be super fast with my slides. So I won't bore you. We're going to go through about 5 minutes of just some tactical insights onto what's happening in the clean tech space with venture investment. Point number one up here on this slide, research tells you what people were thinking yesterday, not tomorrow. So this is my big caveat about presenting research and data, that it is, it is not necessarily predictive of the future. My venture friends up here will sort of talk about pattern matching and how to use the past to explain, good investments in the future. And so I think there is stuff we can learn about the past, but it's not necessarily always exactly what's going to happen tomorrow. Next slide. Those are small, but I'll speak to them. A couple of big takeaways from the past couple of quarters in terms of venture investment. Number one, 2009 was kind of a soft year for venture financing. 2008 was a huge clean tech year in terms of dollars put into the sector. 2010 in the first 2 quarters has been strong. I'm going to get into some of the detail about where that strength comes from, because sometimes the devil's in the details. Solar is bouncing back, and again, I'll sort of talk about some specifics around solar, because there is some nuance, but solar was incredibly strong in Q2, and energy efficiency and deal count has been very strong. Lastly, Brian alluded to sort of the IPO market being in a tough spot, but definitely open. Next slide, please. And then M&A and corporate interest in the sector is increasing at an important pace. So you look around, there are important acquisitions happening in almost every sector of the clean tech space. There are big corporations across the board, from GE to Veolia, a big water company, big French, world's largest water company, making investments and strategic moves in the space. All right, we're going to take some details. Next slide, please. So data, my next caveat, data is just table stakes to this game. So I can tell you solar's up. I can tell you Q1 and Q2 were big. But data, we've got to get into the real weeds of the data to really understand what's happening. Next slide, please. Second quarter matches, we know this. This was good. First 2 quarters are good. Let's get some more detail. Next slide, please. We talked about this a little earlier in the session, that clean tech has been clicking along and is now the number one sector in terms of venture dollars. I think we're all sitting here because we know that, and we know how important it is. But I think it is instructive to understand how important it is to the venture world today. Next slide, please. How did we get to Q1 and Q2 being so good? I think we need to understand that it was a number of very large deals that got the sector sort of back to where it was in 2008. And we sort of call those mega deals above $100 million in financing. So, when you look at us saying there's $2 billion invested into the sector, there were a whole bunch, 8 to 10 deals of substantial size that make up that count. So companies like BrightSource and Solyndra and Amonix and Landis & Gyr in the metering world took on really big rounds of financing. Next slide. Solar is, as I mentioned, back on top. The thing I'd say about solar is, there are investments being made across the entire solar value chain, which I think is important. I think a lot of the early investments were going purely into generation. I think you see second generation investments being made in solar today, both in sort of financing and services companies like the Sunruns and Solar Cities of the world, but also microinverter and balance of systems companies like Enphase and Petrosolar. So I think there's sort of a maturity to the solar sector, and you see investments across that whole value chain.